Imagine kicking back on a beach with a drink in hand, all while your money is working hard for you. That's the power of smart investing. If you're serious about building a future that could lead to millionaire status, you're in the right place. Today, I'm sharing the top 7 ETFs that you can buy, hold, and watch your wealth grow. These ETFs are not only incredibly reliable, but also packed with growth potential, all without eating into your returns with high fees. Now, I know ETFs might sound a bit boring, but here's a crazy fact. 10% of American millionaires made their fortune with ETFs. These aren't just for fancy investors. They're for anyone who wants to reach their financial goals. ETFs are like having your investments on autopilot. You get to spread your money around instead of stressing over individual stocks. The problem is, there are so many ETFs out there, it can feel overwhelming. But don't worry, the ones I'm about to tell you about are the best of the best. Think of them as the foundation of your path to big bucks. Whether you're a total beginner or already have some investing experience, this is for you. Also, don't miss the end, where I will guide you on how much percentage of your portfolio you should invest in each of these 7 ETFs. Trust me, you won't want to miss this opportunity to secure your financial freedom. So without any further ado, let's get started with the first ETF on our list, SCHD ETF. As we are looking for long-term investing, including a dividend king was a must, and SCHD is one of the best funds out there with a long-term dividend-paying history. SCHD focuses on companies in the S&P 500 with a history of paying out consistent dividends. But it doesn't simply track companies with the highest current dividends. It selects stocks based on their financial strength and the likelihood of their dividends being maintained over time. This strategy aims to deliver a steadier stream of income for investors. $10,000 invested 10 years ago in this ETF would have become $29,000 today, keeping in mind that it's not as volatile as its peers. It has a current dividend yield of 3.38% and has given a return of 11.58% in the past year to its investors. Also, it has a low expense ratio of just 0.06%. SCHD provides exposure to a variety of sectors and industries through its holdings. This diversification helps mitigate risk by not being overly reliant on the performance of any single company or sector. If we look at the top 3 holdings of this ETF, on the top with 4.04% weightage, we have Texas Instruments, Inc., which designs, manufactures, and sells semiconductors to electronics designers and manufacturers in the United States and internationally. Second, we have the biopharmaceutical company, Bristol Myers Squibb Company, with a weightage of 4.03%. Then we have Lockheed Martin Corp., which is a security and aerospace company with 3.98% weightage. RSP ETF, Invesco S&P 500 Equal Weight ETF, which trades with the ticker symbol RSP, offers a unique twist on S&P 500 exposure. Unlike traditional S&P 500 funds where large companies dominate, RSP allocates an equal weight to each of the 500 companies. Just to give you a glimpse of the high concentration, the top 10 companies out of 500 weigh 32.78% in the S&P 500 index. RSP's approach aims to reduce concentration risk and potentially outperform the traditional market cap-weighted S&P 500 index over the long term. Almost all the stocks in this fund have equal weightage of 0.22%, except the top 3 holdings, which have slightly more weightage. At the top, we have storage product company Micron Technology, Inc., with 0.24% weightage in the fund. Then we have a mining company, Freeport-McMoRan, Inc., with 0.23% weightage. And then we have logistics giant FedEx Corporation with the same 0.23% weightage in the fund. Rebalancing happens quarterly in this fund, which can result in more frequent capital gains distributions compared to traditional S&P 500 funds. This could be a factor for investors in taxable accounts. RSP has a current dividend yield of 1.52% and has given a return of 13.93% in the past year to its investors. It has an expense ratio of 0.20%. Due to the equal weighting, RSP has a tilt towards smaller companies within the S&P 500. This can lead to potentially higher returns in the long run. QQQ ETF. If $10,000 had been invested 10 years ago in this ETF, it would have become $52,800. Yes, that's more than 5 times your money in just 10 years. This ETF offers exposure to the 100 largest non-financial companies listed on the NASDAQ exchange. Think of tech giants like Apple, Microsoft, and Amazon. QQQ is one of the most heavily traded ETFs in the market, making it easy to buy and sell shares. Additionally, its low expense ratio of 0.20% translates to minimal fees, allowing you to keep more of your returns. As this ETF focuses on growth only, it has a current dividend yield of just 0.58%. But this ETF has given a return of 42% in the last year itself to its investors. QQQ is heavily invested in the technology sector, so it will likely perform well during a tech boom, but might struggle in a downturn. The top 3 holdings of this ETF are Microsoft Corporation with a weightage of 8.74%, Apple Inc. with 7.40% weightage, NVIDIA with 6.31% weightage, SMH ETF, Vanguard Semiconductor ETF, which trades with the ticker symbol SMH, has given enormous 78.47% returns in the last year itself. If $10,000 had been invested in this ETF 10 years ago, it would now have become $98,000. Yes, that's 9 times your money in just 10 years. The fund offers targeted exposure to companies in the semiconductor industry. The top 3 holdings of this fund include NVIDIA Corporation, Taiwan Semiconductor Manufacturing Company, Ltd ADR, with 11.86% weightage, Broadcom Inc. with 7.68% weightage, VGTEFT, Vanguard Information Technology Index Fund, which trades with the ticker symbol VGT, tracks the performance of the MSCI US Information Technology Index. This ETF has already given a price run-up of 4.24% just last year. It has a current dividend yield of 0.69% and a low expense ratio of just 0.10%. The top 3 holdings of this ETF are Microsoft Corporation with a weightage of 18.23%, Apple Inc. with 16.41% weightage, NVIDIA with 10.43% weightage, VOO ETF, Vanguard S&P 500 ETF, which trades with the ticker symbol VOO, tracks the entire S&P 500 index. Over the last 10 years, this ETF has given a 12.66% compound annual growth rate return to its investors. It has a current dividend yield of 1.33% and has given a return of 29.5% in the last year. The top 3 holdings of this ETF are Microsoft Corporation with 7.18% weightage, Apple Inc. with 6.17% weightage, NVIDIA with 4.56% weightage, SCHD ETF, Schwab US Dividend. Equity ETF, SCHD, is a fantastic dividend-focused ETF that prioritizes companies with strong fundamentals and sustainable dividends. Dividend yield, 3.6%. 1-year return, 8.45%. Expense ratio, 0.06%. SCHD selects companies with at least 10 years of dividend payments, ensuring stability and long-term income. If you're looking to build passive income, this ETF is a must-have. Ideal portfolio allocation, SCD, 20%, VOO, 20%, QQQ, 15%, RSP, 10%, SMH, 15%, VGT, 10%, SCHD, 10%. This would create a well-balanced portfolio with a mix of stability, growth, and income generation. Which of these ETFs are already in your portfolio? Comment down below. If you found this valuable, hit the like button and subscribe for more awesome finance videos.